Hello everybody, my name is Christian Charlo. Welcome to that market report. Today we're Thursday, January 23rd, 2014. Today folks, I want to talk to you about the market situation. Where are we right now? Today on the SPY, we actually had a correction because investors continue to be disappointed by the S&P 500 earnings. So if we take a look at the SPY situation though, we're having a correction, but still we have not reversed yet that upward trend. So this correction though, it's only a beginning. And if ever we continue to break that upward trend around 181.69, you'll have to reduce all your long exposure that you acquired around this area. And the new target for the SPY will be at 177.78. If ever we go there, we stabilize and we go further down, then we will be able to actually increase your short exposure on the SPY, because now we will actually be in a clear bearish cycle by reversing this important upward trend. So which company disappointed investors? First of all, we had major cap stocks like JP Morgan posted earnings, disappointed investors. The stock is having a correction. Johnson & Johnson, they beat estimates, but weak earning revenue growth, disappointed investors, having a correction. IBM also, same thing, disappointed investors, has a correction. And same thing also for McDonald's. They beat estimates, but comparable sales were weak. That's why the stock actually didn't surge and stayed flat throughout the day. So what strategy to adopt with this correction? I believe that right now to short the market is not the ideal thing to do because we're still within an upward trend. What I would do is mostly track this correction with VIX. And TVIX, my target is until the SPY reaches 177.78. So this is actually the ETF that you should favor. TVIX and NASDAQ. It already surged today, so I believe that it's still a good entry point if the correction persists on the American markets. And I will also want to show you that with this correction that we had in the markets throughout a lot of sectors, there's one sector that is standing out. It's gold. So gold right now, it's clearly breaking an important resistance. To track this movement on gold, I believe that you could do it through ETF like HGU on the TSX or NUGT on New York. Those are key ETF that you could track. And even if the gold sector today resumed its upward cycle, there were some stocks today that broke out, but we don't think it's an ideal moment to get in on those gold stocks. For swing trading, we believe it's better to day trade them. I give you an example. A stock like Gold Corp, it's pursuing its upward momentum. Okay, it's a breakout, but you could actually get into it and hold on to it until the stock stays within its upward corridor. But our strategy is, if you're getting in on a stock like that right now, your stop loss should be if ever the stock breaks that important support. So on Gold Corp, by getting in now, your stop loss should be at 25.47 on that stock, nothing less. So this is actually the strategy that you should have. So investors are disappointed by the earnings season. So far, a lot of companies are going down. IBM, JP Morgan, Johnson & Johnson. We believe that if the correction continues, our target for the SPY is until it reaches 177.96. So you can track it with TVIX, which is the volatility index. And on the gold sector, even if it's continuing to go up today, we believe that it's better to do so with ETF like HGU or NUGT. And if you want to track gold stocks instead of playing those ETF, if you're getting in on a stock like, for example, Gold Corp, what's important is that you put your stop loss below the support of the last few days. So on Gold Corp, the stop loss should be at 25.50. That said, folks, see you next week for your market report. You can always find us on Facebook, Twitter, chat with us, and always subscribe to marketgurus.tv by clicking at the link below to know all the strategies every day to know how to make more money. Because the more money you make, the happier we are. See you next week.